Well, hello everyone. Welcome to Trading a Smaller Account. It is Friday, the end of a very busy, active, kind of crazy trading week. I think this week was maybe sponsored by the American Chiropractic Association. We got some whiplash with things moving back and forth. But today in Trading a Smaller Account, we have a bunch of cash sitting in our account, about 23,000. And so we're going to look at some different types of stock trades. We may weave some options components into them. But that's what we're going to look at today is taking that currently unemployed cash and deploying it. And we're going to kind of weave that into looking at breakout trades or trend reversal patterns. So that's going to be our theme for today. I have the fantastic Mr. Ben Watson with us in the chat. He is a friend and a fellow coach. We're both senior managers and coaches here at Schwab. If you're with us live in the chat, you can see that there's a lot of friendly banter here between us. And I want to thank, all of you who show up to these classes like week in and week out. So to Paul and Richard and Becca and Kay and Mike and Jay and the rest, Sharon and the rest of the gang. Thank you all for helping bring this class to life and to bringing such great energy to it. I really appreciate that. If you aren't following Ben and I in the land of X, you are missing out, my friends, at Ben Watson CS, at Barb Armstrong CS. A lot of the charts that we are going to look at today are charts that I have posted in the last week on X. We're also now both on LinkedIn. So wander over to LinkedIn. And if you're a LinkedIn person, you can find us there. Before we get into the thick of things, just a quick reminder that options carry a high level of risk and aren't suitable for all investors. Everything that we discuss here is for general information and education purposes, none of it to be construed as a recommendation. We use the Paper Money software application on the Thinkorswim desktop platform, and this is a brilliant place. It is a brilliant place to learn, to make sure you have a trading plan in place, to make sure you understand it, understand the mechanics of how to use the platform before you go to a live account. One of the differences is that short options will never be assigned early in Paper Money, but we discuss that. That can happen in a live account. We do a super quick market overview, primarily because Kevin Horner does such a fabulous job 4 days a week at the market open. So if you haven't been to his class at the market open, you'll want to check that out. We have a little bit of trade management to do today, and then we're going to spend most of our time placing new example trades. So that's what's on the menu. If you are brand new here and you've not been to this class before, just know that we started the year with 25,000. And at the beginning of every year, we reset it. It's always kind of bittersweet, but we reset it. Our max position size is $5,000. And you may be looking at that and thinking, like, back the truck up, like $5,000, that's a lot of shekels. Oh, and now that, I have an on again, off again relationship with one of my drawing tools. But this 5,000 here represents 20%. Let me just change the color. Where's my color bar? I can't seem to find that. Well, you know what? When we get onto the platform, it won't matter. Oh, here it is. Yeah, it was fading in. So this 5,000, it represents 20%. And we did that because we wanted to be able to do things like a buy right covered call, or we wanted to be able to demonstrate using a protective put, that kind of thing. If you had $1 million account, your max position size might be 5%. So that's why we made that decision. And then our max risk per trade is 500 to about 550. And that 500 is 2% of our account value. And so again, if you had a much larger account, you might say like, hey, I'm just learning. So maybe, if you had $1 million account and you said my max risk per trade is going to be half of 1%, that would be like $5,000. And you might say, well, I'm just learning. So even though once I feel like I have this really buttoned down, I may make my position size larger. For now, I just want to make it $1,000 per trade or whatever you want. But you should know what these numbers are, and then you should follow those rules. And our focus here is on the short to intermediate term time frame. To steal a line from a friend in this business, like he says, I'm in the moving business, not the storage business. And in this class, our focus isn't on longer term buy and hold for this portion of our portfolio, which is a $25,000 chunk. Okay. Okay. And we're trading both bullishly and bearishly, depending on what's going on in the market. So there's my segue into, what's going on in the market. So, let me erase this. Okay. So let's come out, and then I have to close that. So here's our account. We currently have $32,000 in the account, but we have almost 23,000 sitting there in cash. And so we're going to look at deploying some of those assets. And if we come and we look at the SPX and we say, well, should we be bullish or bearish? Well, the S&P is up 8% year to date. This last week or so, we've had a bit of a pullback. Yesterday, big up day. And today we're up again, and we're within a stone's throw of all-time highs on this index. And so, some might argue that this uptrend is still very much intact. If we look at the NASDAQ, we came down and flirted with this potential support level, and it's bouncing again today, here an all-time high. And we really ran up this mountain. So are we surprised that we had a pullback for a few days? Yeah, no, not really. How about the Russell? Well, the Russell hit a new all-time high today. So like pretty difficult to call that anything other than bullish, right? Will, I can't believe you relate. I'm a little bit crushed, but that's okay. You're here for the main part. So, and then here's our Dow, and all-time high, and here's where we are today. Yeah. A pretty big up day. The market's kind of melted up yesterday. So, and then where's our VIX? Under 20. Okay, so that's where we're sitting. Now, I posted a couple of things, and this morning I posted a short video on how to look at, in fact, I posted a couple of them in the last couple of weeks saying, when you have a pattern like this, where you have a stock that has been falling, and this kind of teamed up with Humpty Dumpty and rolled down the hill like for months. Like it just started rolling. I don't know if any of you are skiers and if you've ever fallen and then just kept on rolling. Yeah, like so, this rolled down the hill from September until March 13th. And then it started to pick up and it came back up to this, looked like it was in this neighborhood of a previous support level, where it started to gap down here and came up and hit its head again. So spent, a week or two kind of knocking on the ceiling, came back down to the support level and then broke out. We call this pattern a double bottom. And one of the ways that some people might trade this double bottom is to say, okay, and this is a TRIP is a pretty inexpensive stock. So, it's currently trading at 12.23, and we had this range here of about 250, right? From around $9 was the low to about 11.70. And keep in mind, support and resistance are ranges. So if we said we had a range here of about 250-ish. So if we took this, say, at 11.70 and we added 250 to it, we'd have a target of around $14 or $14.20. And so we could do this a couple of ways. One, we could do just buy the stock, it's an inexpensive stock. Or we could look at the options and say, well, if the options are heavily traded, could we do a buy right where the intention is, to sell a call somewhere in the middle of where we think this is going to go with the goal of being called out. And so we've done a lot of these in this account this year. But let's look at whether that's even a possibility. And so if we look at this and we say, well, if we sold the 15 or the $14 strike, we've got a 30-cent bid-ask spread here. So you could drive a truck through that. But this one is 20 cents. And, if we could get filled at the mid and we could make 60 cents a share, you may say, well, that's not much. But it's like, yeah, but that's 60 cents on a $12 investment. So it's not nothing. And then if we look at, well, what are the analysts saying? Well, Davidson lowered it to 1050. BTIG maintains 15. Wedbush rates it an outperform and has a target of 19. So these guys seem to be all over the place, 1370. But the chart is bullish, and it seems that there are more analysts that are bullish rather than bearish. So if we looked at this, could we come here and say we're going to buy covered stock at 1161, selling the $13 call? Well, how much could we make if we did that? So if we switch our calculator and say, well, the most we can make is the difference between the strike and what we're paying to get in, which is a dollar, what, $1.36. Like, is that even worth it? Well, $1.36 divided by an $11.64 investment, that smells like, I'm not a mathematical genius, but I think that's over 10%. It's 11.6. And if we sell the July, like that's 35 days. So are we okay with potentially a, 11%, 11.7% return in 35 days? And so if we said, well, yeah, I'd be cool with that. Well, our max position size, 5,000. So if we're saying, well, if we did 4 of those, we'd still be under 5,000. Now, how much are we risking? Well, we're risking $1,164 a contract unless we put a stop in. So where might we put a stop in? Well, we could come out here and say, well, if we look at this 1170, 1150 range, like if we look at the recent low, here's our recent low of 1135. So if we said 1135 times 0.97, that comes out to $11 even. And to avoid a round number, what if we said 1079? If we made it 1079, so that's like $1, just in that neighborhood of $1 less. So let's make it 1062. So first trigger sequence, we're going to change this to first trigger sequence. We're going to do 4 of these. So that's still under a $5,000 investment. We are going to make this good till canceled. We're going to make this a market order, and we're going to say, if this goes down to 1062, we're out. So we bring up our disappearing, reappearing sprocket that gives us our conditional order, and to say, if this goes down by $1 a share, 1062, we're out. So if the mark on trip goes below 1062, we're out. So how much can we make? $540. Often our trades, like we're making, $100, $150, $200 is a nice base hit. Like 540, man, this is a home run with people on base. Like we're pretty happy campers if we could pull that off. So we're going to do this buy right. Fire in the hole. And so with this one, if we wanted to put this on the chart, so first of all, we bought it today. So here we go. And then we're going to put I'm going to edit this. It's 13. And this is a buy right covered call for July, the July expiration. So now we know what we're aiming for. Now, what if it goes up to 14 bucks? Are we going to be crying? No, because and what if it gapped up to $14 on Monday, and if it were in our live account, what if we were called out? you know what? Crack open the champagne. We've just now made our max gain faster. We were willing to be in this until July 17th. And if we can get out before the end of June, like rock on. Now we have our cash back. We've made our money and we're ready to go to the next one. Okay. Okay. Let's look at, if there's any questions on that, go ahead and type it into the chat. If you, yeah, Bogus Chinchilla is saying it's a garage sale if you fall skiing. Yeah, I call it a yard sale. Same thing. I haven't fallen in a long time on a ski hill. Touch wood. I'd like to keep it that way. Okay, so DXCM. So this one I posted yesterday when, we had this, and again, this one, if we're looking at a longer term on this, like if we come out to a 3-year, at one point this was trading at 142. And I'm not saying this is ever going to come back to 142, but that I'm bringing this up for a reason, because if we come out and we look at, well, this pattern took almost a year just to create, right? And it's a big double bottom pattern. And again, with this one, we're looking at a range on this one that's like 54 to 74. So we've got a $20 range on this one. So if we say 74 to 94, it hasn't been at $94 in the last year. We have a 1-year high on this of 89. But does that mean we can't put that in as a target? And then today it's kind of pulling back. So sometimes it turns out it's not a breakout. It could end up being a fake out, and it could come back down here and then come all the way back down again. That's a possibility. But like, let's say we're going to go off and do something fun next week. We're going to go camping if you think camping is fun. I used to. Haven't been camping in a while now, but you just don't want to be focused so much on the markets. Like you could put in a conditional order and say, well, hey, today's high is 76.25. So we could put in a conditional order and say, hey, if this goes to 76.45, I have more faith that this is a breakout and a retest, and now it's going to continue to the upside. And then, I'd like to enter this trade. And then where might we put an exit? Well, we might say, well, we see our support level here. Like when it came up to, a high here of 75, a high of 74. What was our recent low? Our recent low here today, if we're looking at today's candle, as 73.53. What if we put a stop 3% below that? So 73.53 times 0.97. You might want to use 5%. You can use whatever you want. That makes sense to you. I just suggest be consistent with it. So that would be 71.32 would be our stop. And if we're getting in at 76.45, how much are we risking? We're risking about $500. Now, are we guaranteed to get out at 71.32? We aren't. But, does this trade 1 million shares a day or more? Well, we're already at 1.7 million. And if you're not familiar with this company, it's in the healthcare space. And how's healthcare been doing lately? Well, it's been kind of coming around the bend, a double bottom pattern and a breakout. It seems like a theme, right? So if we look at this and we say, okay, so let's come back to our DXCM. We're going to put a target here at 94. So I just draw a line and we can knock $1 off it. Let's make it 93. And so this is our stock target. And we're going to buy $5,000 worth. So if we said, okay, well, if we're getting in 5,000, if we're getting in at 76.45, I'm going to divide that by 76.45. I can buy 65 shares. Okay. So how do we put that in? We're going to come to our trade tab. We're going to right click We're going to buy custom with an OCO bracket. And we're going to make this, now you can make this like a buy stop order, but we're going to make it a conditional order and say we want to buy it. We're going to bring up that conditional order sheet if and or when DXCM, Dexcom goes at or above 76.45. And then once we're in, I'm going to make these good till canceled. We want to get out if it goes up to $93 or if it goes below 71.32. And so if we look at that and we're saying, well, if we're getting in at 76 and we're out at, hopefully 93 is our target. So 93 minus 76.45, that would be $16 a share. So that's got to be like a 20% return divided. If I take 16.55 is, the most we could make on this with our target. Oh, I have to put this in so we can do that math after. So we're going to put this in. This is a stock with a target, and our target is based on the width of the double bottom pattern. Okay. So this is just a note that we put in for ourselves, kind of to ourselves. No one else looks at these. But if you're saying like, how did I come up with that target? So, and we've got 65 shares. So if we could make, 16.55 times 65 shares. Oh, did I put that in as 100 shares? Okay, come over here. I did. We don't want 100 shares. So I am going to cancel and replace this. And we are going to make this 65. So if we could make $1,000 on this, like this is a grand slam at the bottom of the ninth, kind of run, if we were to hit this. Now, do we have to stay in that long? No, like if it gets up, within $5 of our strike and looks like it's pulling back, like could we exit? Sure. Okay, so, and are we under 5,000? We are. And so this is our target is based on the head and shoulder, double bottom. Okay. Now let's just come up here and make sure that these are now 65. These are 100. So we need to go in and cancel and replace that order too. Make that 65. And this one's still 100. So we had to do them all by their onesie. There we go. I was just saying to somebody earlier today, like I was, when my son was about 6, he made a mistake. And, I just said, hey, you're going to continue to make mistakes through your whole life. Like I'm a grown up and I make mistakes every single day. When I'm really on a roll, I probably make 2. Or 3. So get good at, when you mess up, fess up. And if you're really cooking, mess up, fess up, and come up with a plan on how you're going to fix it. So the problem isn't in making mistakes, it's in denying or not recognizing that you made them. So there we are on that one. And this one hasn't filled yet because we said we wanted to pay $11.65 and they now want $11.73. It's like, okay, be like that. We'll give you the extra money. I tell you what, I'll give you $11.73. Let's see if it'll fill at that price. So that is Trip and Dexcom. Let's come and now let's go over to the banking industry. Okay, so we're going to come to Bank of America. And this isn't a double bottom, but you measure the pattern the same way. And this is another one that I had recently posted on X. And there we go. We got trip. And somebody said, well, you say it's a cup and handle. There's the cup and there's the handle. And this person said, I see an inverted head and shoulders. And that's legit. And you can see here that, it kind of came up and then came back down. And then, we had a wick kind of blow through here. But again, these are kind of ranges. And it's gone from a low around here of 46 up to 54. So that looks a lot like about $8. Now here's a high for this stock at 57.55. And this stock was uptrending and then kind of went through this consolidation, right? And you may want to look at some of the fundamentals, and that's certainly a legit thing to do. You may want to come out here to the trade tab and say, well, this has a price earnings ratio of 13.8, so it's in that value category. That might have appeal. It also pays a dividend. Now, one of the differences between paper money and a live account is that paper money doesn't actually pay dividends. And, even though a stock pays a dividend now, it may not continue to pay a dividend in the future. There are no guarantees. But, if we look at this, say, well, this might have appeal for different reasons. And, when we look at the financial sector, it was kind of having some struggles. And then we had a diagonal resistance breakout. And, it's consolidated, breaking out again. So this sector seems to be showing some strength also. Yeah, that was a crazy candle. And sometimes when you get these crazy candles, you can come in. I'm just trying to remember how to fix these. You can adjust these candles sometimes. And I've done that when it skews your whole chart, but we're just going to kind of ignore that anomaly. But if we looked at that and we said, well, if we look at a 5-year chart, this is an all-time high, this 57.55. So to add $8 and to go to 64, is it possible? Absolutely. But if our goal is to be more in the moving business than the storage business, that might take a while. Like an $8 move on a stock that's trading under, at 55 is bigger than a 10% move. It's probably closer to a 15% move. Could we measure a target another way? Well, we could come to the fibs and we could use a fib target. So we could say, well, we had this resistance level here around this 54 and change. We could come down to here, or we could, even if we came all the way down, that would still be a fib target of about 59 as opposed to 64. And so you could say, well, you know what? I get to pick my target. I don't have to, do my target the same way. I think this would be a nice gain, 55 to 50, let's call it 59. So if I made it 59, I buy it 55.68, how much could I make? Well, 59 minus 55.68. That's 332. Like that's got to be close to 6%. So if we divide that by 55.68, yeah, it's 6%, 5.9%. I'm rounding. And if we said, well, we'd be cool with that kind of return. Oh, somebody's saying right click, remove bar to redo this. I don't see it. I'm just not seeing it. Anyway, I'm going to get rid of this. Oh, now my fibs I'm throwing fibs all over the place. So we're going to do another stock trade because we still have a trade that hasn't filled, but we still have, a fair amount of cash sitting here. So if we did 100 shares, that'd be 5,500. And why might we want to do 100 shares? well, we might say, what if we came out here to the 60 and, we could come out to July and sell the 60. And if it comes to 59, we could buy this, we could end up buying it back, or, that's another 1%. So, or when it gets up to 58 or 59, if it looks like it's still rolling, we could choose to sell one then. And, we just might, if we want to have that option, or the choice of using an option, then we may want to have that 100 shares. So if we're saying, well, we're okay with that $5,500 position, and that's our rationale for it, then we'd buy the 100 shares. And so we're going to come to buy custom with an OCO bracket. We're going to put our stop about 3% below that recent support level. So we're going to make that stop at 52.75. And our target, we're going to make that 59. We're going to make both of these good till canceled. Confirm and send. And we're going to put this into a stock with a target, and this is a fib target, the 161 extension. Now, if you're new to technical analysis, there is an advanced technical analysis class today after this class, but there's also a getting started with technical analysis on Tuesdays at 2 o'clock Eastern. You're welcome to join us for that. Okay. So we're going to do one other in this series. So I see this, and it was funny because last weekend Ben and I were in San Diego, and every ticker symbol that he brought up reminded him of food. So we were looking at Pan W, but in his mind, that was Panera. I look at this and I think Fitbit, but it's really Fifth Third Bank. So again, we're still in the financial space, and I think you guys will recognize this pattern because it looks remarkably like the pattern on the last one, right? A cup and handle. And again, we measure this kind of the same way. Like in this one, again, like I drew my line here at 43.31. The low was actually 42.94. So if we say 43 to 51.50, that looks like about an 8.50, a range of about 8.50-ish. Or you might say, well, $8 is good enough. And you might say, well, we missed it because it came up and it didn't really come back to retest. But, and today it's up, $1.25, which is a lot. Like that's 2.5% almost, on a $50 stock. We're getting close to the previous high here of 55.40. We're at 54.67. But if we put in a target of 8.50 above, that would be a target of about $60. That's almost off the charts. So what if we just said, okay, let's make our target 59.50. And where might we put our stop? Well, we might put our stop still going 3% below here. And then you're going, ooh, it's moved so far, that's more risk. And yeah, it is. 51.50 times 0.97. So 49.95, like let's make it 49.89. I don't want to be that close to the $50 mark, 49.89. Okay, and then do we want to just put in the $60 target, or, could we do a buy right? So we could look at both. You can't, we may as well make an informed decision, right? So if we come to the trade tab, if we look at the 60, that's like a 100% gap. But here, and we don't have much volume, but here we have 1,000 contracts. It's traded more than 3 million shares. If we did the 55, and you might say, but you were going to put in a target at 60. Well, and we could just do it and put in a target at 60, right? Or a target we were going to make the target 59.50. And how much would we make if we did that? Well, if we say, okay, so if we put in 59.50 and subtract 54.69. Oops, dang it. 59.50 minus 54.69. So we could make about $540. Now, what if we did this 55 instead? So we're going to come and buy covered stock. We'd be in for 53.11. So the most we could make on that is 190. Now, the other thing is then we have to do 100 shares. So we have to go to 5,300. And you know, we said we were okay with doing 5,500 with the other one, but what's the probability of it being at 55 come July 17th? Well, here's our probability of touching. Here's our probability of touching. Here's our probability of in the money. So our probability of touching, 93%. Our probability of being in the money, 45%. At 60, which is the closest to our 59.50, we've only got a 25% chance by July of being there and a 12% chance of being in the money. And so if we said, well, if we're kind of not doing an all the way May thing and going for the sure, the higher probability trade, this might be it. And you know, and then we're risking less because if we're putting our stop at 49.89, now we're risking, you know, about well, that's almost $50. So we're risking about $300. Again, no guarantee on that stop. But if we did it this way, the probability of being in this trade a shorter period of time is higher. You know, now if it comes up, you know, and let's say it's at 57 come July, you know, could we sell the 60 strike then? And if we're not called out, like, because it's a, you know, a 46% chance of it being in the money at expiration, you know, we get to keep this money and then we could sell another one at either the 55 or maybe if it closes at say 54 something, we could then sell the 60 and get a similar amount. So I'm just kind of thinking through like how it might play out. It also could go against us. And we want to be prepared because we were Girl Scouts and Boy Scouts when we were kids. Or if you're Canadian, you were a Girl Guide. And you know, your motto was what? Be prepared, right? So we're going to put our exit in here. We're making this a market order because we know if we get stopped out that the call that we sold will be worth less, but we don't know exactly what it will cost us to buy it back to close out the trade. So we're just going to say whatever it costs, like buy it back and then sell the stock at 49, if it goes below 49.85. Confirm and send. So we're going to buy shares at 53.08. So this is a buy right covered call. The goal is to be called out. The most we can make on this, $192. We're going to put this in our buy right covered call bucket. Fire in the hole. And then we have one trade that hit a target. That was SanDisk. Our strikes were, this is a very expensive stock now, at 1650 and 1660. On Monday, we did a long call vertical. On Tuesday, we exited that position. And we, you know, we did really well on it. So we were up on that one, $3.60 or $360. We did one contract because we were risking 445 bucks and we could have lost all of it. So when you look at your return on risk, you would take, we made 360, which is the 805 minus the 445. We were risking 445. So that was about an 80% return. Now, was that our goal? Our goal is a 50% return. But, you know, we'll take the $360. Thank you very much. So, if we look at what our target was on this, our target was 750. So we got out higher. And this might have been a bit of a paper money fill, or it could have been because we got out, the market may have just moved up. So when we got in this on the 8th and out on the 9th, it may have been when it moved up kind of to the top of its range for the day. But if we hadn't been out then, we would have been out today, likely for sure. Oh, sorry, this is Fitbit. SNDK. So we got in on this day. We probably got out when it came up to the top. But, had we not been out on that day, we'd be out here. Now we have two other long call verticals, and here's how much time it takes to review those positions. Okay, it's gone up a few pennies, this one, Fitbit. Cancel, replace. It's a buy right. Was that a buy right? Yeah. Okay, so I'll make sure that one fills. But if we come to our monitor tab and we come down, here's all our new positions. Here's our two long call verticals. Is either one of those at a 50% gain or loss? No. NVIDIA, well, it was up when I looked at it today. Like it was, up a little more. But is it sitting at a support level? Yes. So even though it's down closer to 50%, if we think that this either diagonal support line or horizontal support line might hold, we might just leave it. We've got, 30 days. We've got till July 17th. So that's that. Okay, so that's our review. And if we had 7 or 8 of those, it may not have taken much longer, right? And Apple is on the struggle bus. We'll look at that one on Monday. That's a short put vertical that we did on Apple. So what did we do today? Well, we did quite a bit. We did a trade on Bank of America. And that was a stock trade with a target. We did a trade on Trip, where we did a buy right covered call. And then we teed up a buy right covered call on Fifth Third Bank, in Barb's mind, Fitbit. And I'll make sure that one fills. Like, we've offered more than it's currently trading for. So we're just kind of waiting for that one to fill. And then we also teed up a trade on Dexcom, DXCM, with a conditional entry. So that one may not fill till Monday. And even though I've said, like, if you're going away and you don't want to be looking at the markets every day, when you place a conditional order, you should be checking in on those trades daily, because if we have another day of hesitation, you may want to change your entry point. So guys, that's a wrap. We're trying to use our little employees, otherwise known as cash, and get that money working for us using shorter term targets. So I want to thank Ben for being with us. We have a survey in the chat. So there's 2 questions, and it's like 1 to 10. 1, I hated it. 10, I loved it, and I'm going to keep coming back. And everything in between. You can put comments in. If there's topics you'd like to see me cover in the upcoming weeks, let me know. So that's that. Hit the like button. Subscribe to the channel if you haven't done that already. In the trade management mini sessions, if you don't have a trading plan for the buy right covered call, you'll want to go and have a look at that. So that's a playlist in the Trader Talks from Schwab Coaching. Don't forget to follow Ben and I in the land of X and LinkedIn. On X, it's Ben Watson CS and Barb Armstrong CS. So thanks to Ben, and thanks to the guys behind the scenes for helping bring this class to life. Thanks to each and every one of you for continuing to show up. Your future self will be grateful for it. Get out and hug someone you love, guys. Have a great weekend, and I will see you Monday. Stay tuned. Lots of great content still to come your way today. Bye for now.